And in our top business story, growth of the UAE's non-oil private sector accelerated to a 10-month high in July, with sharp expansions of output and new work helping the sector to gather momentum. At 55.3, the headline seasonally adjusted Emirates NBD UAE Purchasing Managers Index, which is a composite indicator designed to give an accurate overview of operating conditions in the non-oil private sector economy, was consistent with a robust improvement in business conditions in July. The index also signalled a rebound in growth, having slipped to 53.4 in June, with the latest reading the highest in 10 months and above the long-run series average of 54.5. Higher output was a key contributor to growth of the non-oil private sector as a whole, with a rate of expansion the most marked in nearly a year, supported in turn by a sharp rise in new work. Data signalled that growth of total new business was largely centred on the domestic market, as new export orders fell for the first time in 3 months and at a record pace for the survey. There were reports of fragile economic conditions across international markets. Purchasing activity was also reflective of rising business requirements in July, and the rate of inventory building also picked up. Job creation was another byproduct of new order growth in July. The pace of hiring quickened to a 14-month high, contrasting with the trend seen over the second quarter, when employment was either stagnant or barely rising. On the price front, the rate of overall cost inflation changed little since June at the start of the third quarter. The UAE Finance Ministry this year expects the approval of a federal debt law that will allow the government to sell bonds on a federal level. That's according to local reports. The statements were made by Yunus Al-Khoury, the Undersecretary at the Ministry of Finance, on Tuesday, as the ministry released its 7th annual statistical report yesterday. The ministry has been working on the federal debt law for years. Currently, individual emirates, including Abu Dhabi and Dubai, have tapped the international bond markets, but the approval of a federal debt law could see between 80 billion and 100 billion dirhams raised via a bond sale. That's according to ministry estimates. Debt issuance in the UAE is expected to accelerate as the country looks to finance a fiscal deficit, which reached 2.1% of GDP last year. That's according to the IMF, which has called on the UAE to tap bond markets and the assets of its sovereign wealth funds rather than draw down its local bank deposits to balance its budget. In April, Abu Dhabi raised $5 billion from the international debt market since its first bond sale since 2009. New research reveals that the 3 main Gulf carriers have seen substantial growth in first and business class passenger volumes on routes between Europe and Asia Pacific. That's between 2014 and 2015. According to new figures from travel bookings agent Amadeus, first class passenger volumes for Emirates, Qatar Airways and Etihad Airways on the top 10 routes between Europe and Asia Pacific increased by 67%, while business class traffic increased by 47%. The growth in premium classes was complemented by healthy overall growth, with a 7% increase in passenger volumes recorded across all cabin classes for the same routes. Meanwhile, Dubai, Doha and Abu Dhabi airports registered a combined 8% increase in transit traffic for flights between Europe and Asia Pacific across all travel classes. Amadeus highlighted the 10 strongest routes from Europe to Asia Pacific in 2015, with Frankfurt to Bangkok coming in top, followed by London to Bangkok, then London to Delhi. Bangkok was overall the most popular destination, with 5 of the top 10 routes terminating there. Munich to Bangkok was ranked 7th, Amsterdam to Bangkok in 9th, and Paris to Bangkok in 10th. Saudi Arabia has been revealed as the largest importer of gold from the UAE for 2015, with a value of $1.8 million. That's according to a recently released Dubai Chamber of Commerce and Industry special report. According to the report, the UAE is becoming increasingly competitive in Saudi Arabia's import market, as the kingdom constitutes the second largest destination for UAE-made products after India. The movement of goods between the two countries has been facilitated by the GCC customs unification procedures and efficient transportation systems. And according to Federal Customs Authority data, the UAE recorded a 40 million dirham trade surplus with Saudi Arabia in 2014 as it gears up to release its 2015 data. While Saudi imports from its neighbour are diverse, items such as pearls, precious stones, metals and coins dominated the list in 2015, making up 22% of the UAE's total exports of these products and 32% of the kingdom's net global imports of the product group, worth $3.7 billion. The report also revealed that the UAE made up 27% of Saudi Arabia's imports of copper, worth $672 million, and 11% of its imports of articles of iron and steel, worth $626 million.